and welcome to this week's market update from ICM.com. So we're going to talk first about the top movers for the past week and what are the key movers also to watch out for this week, and highlight the key economic events and releases, and end the session with a look over some of the major charts on the MetaTrader 4 platform. Okay, so first we are going to start with the key movers of the recent fluctuations in the market. So mainly we remain with the COVID-19 implications on the economic recovery. Still the cases are soaring around the world. We have the total cases surpassed 27 million, and deaths are also almost nearing 900,000, and the recovered cases also crossed 18 million, which is a little bit optimistic. However, what we have to look out for is the recent outbreak in the United Kingdom, which is also raising some expectations of a new lockdown where the government is trying to avoid it. So this is what's happening around the world. We just mentioned this in all of our previous webinars, previous market updates, is that governments are lost between two options. It's either to accept the casualties and continue with the normal economic activity in order not to face another recession or another drop or another sharp drop in economic activity, or just go for another lockdown and also bear the cost of the lockdown. And we witnessed how it affected previously the economic performance of major countries around the world. So this is for the COVID-19 implications. We just have to look what the UK government will take a decision in response to the recent outbreaks, since numbers rose to their highest per day since May. So this is for COVID-19. Moving to the next mover had a little bit of an impact on the Australian dollar. It was the Reserve Bank of Australia monetary policy meeting. The bank kept the interest rates and asset purchases unchanged, so the policy settings were unchanged, and this had no major critical impact on the market. However, we've seen the Australian dollar rising to new highs. So this was post the RBA, and after that, we also from Australia we got the final reading of the second quarter GDP, which showed also a sharp contraction during the second quarter. The US jobs report was also one of the main events last week. We witnessed that the US economy created around 1.371 million jobs during August, slightly missing expectations of 1.4 million. However, this was a good reading according to Jerome Powell, which had an interview on Friday. He said that these figures are okay or good. They are showing that there is progress in the labor market. There is a bit of a recovery happening, a good recovery happening, especially also as unemployment rate fell sharply to 8.4% from 9.8%. So this is for the jobs report. It's a bit optimistic. Also, along the jobs figures, throughout the week we had the purchasing managers index for the services sector and the manufacturing sector. Slight change in the services sector to the downside. However, we're still facing a little bit of improvement in the activity in top economies around the world. So this has also had some impact on the market. We witnessed some market moves following the release of such figures. Also, what's erupting in the market, what's coming to the market currently, it's especially leading to heavy losses in the British pound against other counterparts. We witnessed the British pound rising sharply during the past week, however, during the last couple of days of the week. And today, the British pound was suffering, and this is due to some news or some reports stating that there could be some complications to the coming talks between the European Union and the United Kingdom concerning the Brexit. And especially that there were some reports stating that the United Kingdom could be going for some actions that could disrupt what the both parties were agreeing on in the withdrawal agreement. So this is having a clear impact on the British pound, and we're seeing the British pound dropping sharply. So you have to watch out for the coming week. You have to watch out for the talks that will start tomorrow, and especially for some headlines on Thursday and Friday regarding the progress of talks. So this is for the Brexit issue. These were the key movers of the past week, and currently what we're witnessing in the market. There are also something I would just want to talk about a little. What happened during on Thursday and Friday in the stock market. We witnessed a sharp collapse in major U.S. indices, Dow Jones, S&P, and Nasdaq, mainly This was cited for some profit taking. However, it was a little bit sharp due to the ongoing volatility in the market. We witnessed some pretty good volatility on the way up. So definitely this could also weigh on some sharper corrections when it's time for a correction. So this is what was happening. However, on the positive side for the stock market remained the same. There are some expectations for coming fiscal stimulus despite lateness or delay. Kudlow stated that there are some delays. However, they're still on the path for reaching a deal over the current fiscal bill or the relief bill. Also, Jerome Powell, the Federal Reserve Chairman, he stated that interest rates will remain low for extra time. So this is also on the supportive side. This remain one of the supporters for the current upside market rally. So this is for the recent moves that we witnessed last week. Let's move forward to highlight the top economic events for this week. We don't have much of an economic releases, but we have two major central banks meetings, so that's what you should be looking for. So on Tuesday, we start early with Eurozone, the German trade balance, expectations of a surplus of almost 16 billion euros versus previously 14.5 in June. Also, we have from the Eurozone, the final reading of the second quarter GDP showing a contraction of negative 12.1, similar to the preliminary reading. Moving to Wednesday, we start from the it's a bit shy in the morning in the European session, so we move to the US session with the jobs openings, expectations of a rise towards 6 million from 5.889 million previously. From Canada, we have also the Bank of Canada interest rate decision. There are no expectations of any changes in the policy settings, so interest rates could remain at their current levels at 0.25%, and no changes expected for the asset purchases. And also, since on Monday today it's an off day in the United States, it's Labor Day, so all the oil inventories indicators will be shifted forward. So the API, American Petroleum Institute weekly crude oil stock, will be released on Wednesday night instead of Thursday. Last week it showed a drop in inventories by around 6.36 million barrels. The official numbers will be released on Thursday. Thursday we start with the key event of the day will be the ECB, the European Central Bank monetary policy meeting. Also, there are no expectations of any change. Interest rates to remain at 0% and deposit facility rates to remain at negative 0.5%. And after that, the European Central Bank president will be Christine Lagarde, will be communicating the decision to the public, will be explaining all what's happening in the Eurozone region and how the EU region, how the ECB will be dealing with the current recovery. Moving to the United States, we have the initial jobless claims, which showed an increase by 881,000 last week only, which was also a good reading, showing progress in the labor market. This week there are expectations of only 838,000 claims to be posted. Also from the United States, the producer price index, expectations of a rise of 0.2% back in August. The weekly crude oil inventories by the U.S. Energy Information Administration, expectations of a decline again in inventories by 1.887 million. And after we have the Bank of Canada governor will be speaking about the economic progress and the current economic recovery. Moving to Friday, we start the day with the GDP figure from the United Kingdom, the month-to-month reading for July, expectations of an expansion by 6.6% versus 8.7% in June. Also, the manufacturing production and the industrial production showing also an expansion, 5% for manufacturing production and 4.1% for industrial production. After that, we have the Eurogroup meetings. And from the United States, the consumer price index for August, month-on-month change expected 0.3%. And we end the week with the US Baker Hughes oil rig count, which rose by 1 last week to 181 from 180. So these are the top releases and events that you have to watch out for, along with the Brexit talks or Brexit negotiations. Now let's move to the MetaTrader 4 platform to have some insight on the latest performance on the charts. Okay, so let's start with the euro dollar. So on the weekly chart, even on the smaller time frames chart, we can see that we're still stuck inside a certain pattern, despite having a higher high during last week. If we just have, I'm just going to draw the formation, the current formation that we are trading in. We have a formation of combining the previous stops. We can see that exactly we had the high reached last week was exactly at the top of this, what was reached by combining these previous two tops. So it was almost exactly near 120, in addition to the psychological aspect of this level. Also, we can have or detect the lower band of the range by joining the previous lows. So this will give us a bigger picture that we are stuck inside a certain consolidation range despite going for recent highs. However, we're back inside the range, awaiting some fresh fundamental drivers. Maybe investors could be a little bit more cautious since we're awaiting the European Central Bank meeting this week. So so this is what you have to watch out for, how this this zone will evolve following the ECB meeting. On the downside, if you're just looking for some support, you better watch out for 117 level, and after that we have the previous stop reached here, which is around 115 level. This is on the downside. If you're looking for some targets on the downside, and on the upside, definitely we have the previous top near 120 psychological level, and in the previous weeks also we talked about other tops near almost 120, 140 level. So this could be another resistance zone. So this is if you're trading to the upside, the euro dollar. So these are the key levels to watch out for. Also, we could be looking for a pivot or a reversal or a positive ambience if we were able to trade again above 118.80 level. This is for the euro dollar. These are the key levels that you better watch out for. I'm just gonna thicken these levels so you're gonna have them better. So on the downside, the first support 117, the lowest support could be 115, and on the upside 120 and 120.40. These are the key resistance levels if you are trading the euro against the US dollar. I'm just gonna add some of the technical indicators in order to check. Okay, so if you just go for the weekly chart, you can see how we are moving away. We are diverging from the upper side of the Bollinger Band, or the upper band of the Bollinger Band. So this is what you have to take into consideration, that the previous momentum that we had in this rally is a little bit diminishing or getting lower. On the daily chart, we can see this consolidation zone is very clear here with the effect of with how the Bollinger Band is moving. So it's a bit constant for a while now. We're still far from the 100 and 200 day exponential moving average. On the H4 charts, you can see that the 200 H4 exponential moving average is showing a little bit of a support. So watch out how this will perform if we drop to this level again, which we could coincide with the previous support that we talked about near 117. On the daily chart, we're trading near both lower than both the 100 and 200 hour exponential moving average after witnessing this clear reversal. So let's go to the pound dollar now. I'm just gonna remove all these and start from scratch. So this is what we've been talking about, what happened to the pound. So we rose to its 134.15 level, which was almost exactly the previous stop that we talked about on Monday, the previous Monday in the webinar. So it's almost the same top near 135 level. And due to the headlines and concerning Brexit, we witnessed this huge reversal here on the daily chart. You can see this reversal, candle reversal formation and the continuation. Also this tail here, it was a bit dovish or bearish. So if we just go for using the same technique that we used with the euro dollar by combining the previous stops, the previous significant tops, we can see that the market failed to close above the combination of these stops. And on the downside, you can look for some resistance or change in trend upon the break of this trend line showing drawn by combining the previous critical lows and the pound in July. So this is what you have to watch out for in terms of formation of the pound. We were witnessing higher highs, and now we are looking whether the pound's gonna go for a lower low. The first lower low could be locked if we break below 129.79 again. So this is for the British pound. I'm just going to go for add some indicators and reassess. So on the weekly chart, we can see how the price is reversed after trading above the upper band of the Bollinger Band. Moving to the daily chart, also we're crossing below the middle band, below the 20. We're using the period 20, so below the 20 simple moving average. We're trading below it for the first time in a couple of weeks. So watch out how this will perform. And the lower band of the Bollinger Band is almost coinciding with the previous support level near 29.70, 130 level. So this is for daily chart. Even the RSI is moving lower, and you can see here, if we just draw this trend line, combining these previous lows in the RSI, we can see here there is a little bit of a break. So this is for the daily chart. You go for the H4 chart. The 100 H4 exponential moving average was giving support in the past couple of weeks for the price action. However, this support failed to hold during the second attempt, and now we drop towards a new low relative to the previous price performance. On the hourly chart, we're trading below both the 100 and 200-hour exponential moving average, and the 100 hours is looking to cross below the 200-hour exponential moving average for the first time in a while since this rally started. So this is what you have to watch how the price will perform, especially as we await the Brexit talks this week. So I'm just going to remove these indicators to highlight with you the key levels that you better watch out for. So first here we have the 129.80 level. It's a bit far, I know, but this is one of the key significant levels. And ahead we have the 130.50 almost level. Also, it was a key support during this fluctuations here. So this is almost a range, an area, a support area between 129.80 and 130.50, and the next key area or key support could come in at 28.10, which was the previous top here, during this swing to the upside. And on the upside, a little bit of positivity will come back if we trade back above 32.70, and the next resistance could come in near the recent top, near 34.80 level, 135. So these are the key levels. If you are trading the British pound against the US dollar, you better watch out these markets or these levels as we go into the week. So this is for the pound dollar. Moving to the dollar yen, we're still trading inside the certain consolidation range between 105 and 107, despite the resignation of Prime Minister Abiy and the confusion of what could be happening next following what we've witnessed from the Abenomics. So this should be one of the interesting movers to watch out for in the coming weeks, especially to trade the Japanese yen against other counterparts. So we remain trading inside the certain consolidation range. It's a very clear range between 105 and 107 for a new week now. So this is for the dollar yen. I'm just going to add some of the technical indicators again to this chart so we can assess together. So when using the weekly chart, you can see that we're trading inside the lower bound of the Bollinger Band, between the middle and the lower band. If we go for the daily chart, you can see how many times we got rejected from the 100-day exponential moving average, 1, 2, 3, and currently we're trading slightly below it. You can see how the volume or the momentum is getting lower due to higher uncertainty. We can see a couple of dodges here, which translates what's happening in the market. On the H4 chart, also we can see a consolidation, a clear consolidation, a range, clear range, the one which you talked about, 107 and 115, and we are trading between near the 100 and 200 hour H4 exponential moving average. So nothing much is happening with dollar yen. There's a bit of uncertainty. However, on the bigger picture, we are trading inside the certain range between 105 and 107. So watch out for any break out of this range in order to trade. So this is for the dollar yen. Moving to the Australian dollar against the US dollar, also similar rally to other currencies. We witnessed a sharp rally here, especially after the RBA left interest rates unchanged. However, this rally couldn't hold, and we dropped again towards almost 0.72 level. I'm going to start with the weekly chart here. You can see how the weekly candle, it's a little bit bearish, but failed to have further bearishness or remove all the gains earned during the previous week. Moving to the daily chart, you can see here a little bit of similar to an evening star formation, 1, 2, 3, and then we got this negativity, and now we are in the phase of consolidation. On the H4 chart, it's a bit clearer. So we had this consolidation range at slightly higher highs, but now currently we failed to go for another lower low on the picture page on the bigger picture. So watch out for any break below the trend line, combining these previous stops in order to, if you are looking for any clear reversal in trend in the Australian dollar against the United States dollar. So I'm just going to highlight some of the key levels, but before, let's just add these indicators and check. So on the weekly chart, you can see still the Bollinger Bands are a bit wide, but the gap between the Bollinger Bands are closing in a little bit, despite this upside rally. The 100 and 200 week exponential moving average are closer to each other. On the daily chart, we were back to the 20-day simple moving average during the past couple of weeks. Every dip below the 20-day simple moving average, which is the middle band of the lower band, was a buy. So all the dips towards the 20-day simple moving average were a buy, and the price rallied to the upper side or the upper band of the Bollinger Band. Currently, we're staying near the 20-day simple moving average. Watch out for any break below it, which could trigger further downside towards the previous support area, which could coincide with the bands near 0.71 level. On the H4, we're close to the 100 H4 exponential moving average, provided serious and clear support in the previous weeks. So you just can here find support. So all these drops below the 100 H4 exponential moving average were giving a buy signal, and the market was rallying to the upside. So watch out how the price will currently perform with the recent drop. And also on the hourly chart, similar to other pairs, we're trading below the 100 and 200 hour exponential moving average due to the low volatility today. Since the market's a bit quiet today, we're witnessing that the upper and the lower band are converging, and the size or the width of the Bollinger Band is diminishing or lessening. So watch out for any break soon. And this is for the Australian dollar against the US dollar. I'm just going to highlight the key levels that you better watch out for. So a little bit of positivity will come back if we trade back above 73, which is almost 20 pip away from here, but it was the interim top, and after that we go for 74.10, the recent top reached. On the downside, we have the trend line, which we are almost trading at. I'm just gonna try to fix it. So we're almost trading near it. So watch out for any break below the trend line, which could also be similar to the previous bottom reached near 72.20, and after that key support could come in at 70.60. So these are the key levels for the Australian dollar. On the upside, 0.73 and 0.7410, and on the downside, 0.7220 and 0.7060. So these are the key levels for the Australian dollar against the US dollar. Moving to the New Zealand dollar, we're still trading inside of the channel that we highlighted last Monday. So this is a channel here. We are still trading inside this channel, awaiting the key fundamental drivers that could push the price either upside to retest the upper side of the channel, or down towards also the trend line or the bottom side of the channel, which could come near 0.6560. So I'm just going to highlight the key levels. On the upside, we have 67.90 almost, and on the downside, 64.80. So this is the range that we've been trading in, the horizontal range, not the channel that we're talking about. So if we go for the daily chart, we can highlight definitely another higher high, which was around 0.6940. So you can see here how the market respected the previous top here. So we traded exactly near this top and then reversed. So these are the key levels on the upside, 0.6790 and 0.6938, and on the downside, 0.6490 and ahead of it, 0.6570. These are the key levels if you are trading the New Zealand dollar against the US dollar. I'm just going to add some indicators to have maybe a little bit of a clearer picture of this that could create some trading signals. Nothing much happening on the weekly chart, since the move was a little bit shy relative to what we witnessed during the first couple of weeks of the rally. On the daily chart, we're still trading above the 100 and 200-day exponential moving average. However, we found a little bit of a rejection near the upper bound of the Bollinger Band, and currently we are approaching the 20-day simple moving average, which is the middle band. On the H4, the Bollinger Bands are moving lower, so the slope is negative. We found a little bit of a rejection also, again, following the correction near the 20-day simple moving average, and we're finding support near the 100 H4 exponential moving average. On the hourly chart, you can see the consolidation here and how the Bollinger Band is constant, and we're trading between the 100 and 200-hour exponential moving average, showing a little bit of uncertainty ahead of the next move. So this is for the New Zealand dollar. Moving to the USD CAD. So on the weekly chart, you can notice how the market was performing. A series of consecutive losses for the pair. The Canadian dollar was stronger among the strongest commodity currencies. However, the rejection came near the 130 psychological level around 129.70, which was also a previous support zone or previous rejection zone ahead of the rally that occurred due to the coronavirus outbreak. So this is for on the bigger picture. Moving to the daily chart, you can see that we're still trading above the key trend line that was set by combining the recent tops of the recent rally to the downside or the recent downtrend. But we have also a closer look on the H4. You can see how we've been trading inside this channel here. So you can see how the market is trading clearly classical technical. So you can see how the market was fluctuating inside this this downside channel, downward channel, and how the bottom of the channel coincided with the previous support zone, and this led to a clear reversal of the market from the bottom side of the channel towards the upper side. So we're talking about almost 150 pips from the bottom of the channel towards the upside, and we're currently trading below it. So watch out how the price will evolve and how we'll trade out of this channel, especially as we await the Bank of Canada monetary policy meeting on Wednesday. So I'm just going to add some technical indicators before moving. On the weekly chart, we can see that we're trading slightly above the lower band. So we're testing the band, the lower band, and every week the RSI is a little bit above 30. On the daily chart, we can see how the price is moving in the lower part of the Bollinger Band, finding rejections or selling pressure near the 20-day simple moving average, which is the middle band, and finding support near the lower band. Also on the H4 chart, you can see how the 100 H4 exponential moving average was playing a good role in creating sell signals. So you can see here, first sell signal, another sell signal. All the rejections from the 100 H4 exponential moving average were profitable to traders. Moving to the hourly chart, we are currently inside the slight consolidation zone during the past 2-3 trading weeks. So this is showing on the slope of the 100 and 200-hour exponential moving average. So let's just highlight some key levels before moving to gold. So the upper side of the channel that we talked about, another confirmation could come on any break above the 3160 level, and after that we could be looking for a move higher towards 3250. And on the downside, definitely the previous interim low, almost near 130.40, and after that 29.90 levels. So these are the key levels if you are trading the USD CAD against the US dollar against the Canadian dollar. So watch out for these levels. I remind you again that on Wednesday we have the monetary policy meeting of the Bank of Canada. There are no expectations of any changes, but still this could create any movement in the market. And on Thursday, the Bank of Canada governor also will be speaking about the economic progress and the current recovery. Moving to gold, still trading inside the bigger picture, the bigger consolidation zone. If you just go for the weekly chart, it is a bit clear how we are trading inside the bigger candle, the famous candle with the almost $200 drop. That was the candle that I'm showing you, and during the past 3 weeks, and today we're still trading inside this bigger candle. If we just go for the daily chart, it gets a little bit clearer. big candles and then retracements, big candles and then retracements. So nothing is clear. On gold, we're still trading inside on the bigger picture. We're still trading inside a consolidation zone. On the smaller time frames, since we are trading inside the big consolidation zone, traders would be looking for buying the bottoms and selling the tops until we break above, out of the current zone. So let's just highlight the key levels before moving to another. Before moving to adding some indicators. So on the top side or on the upper side, 1992. I'm just going to highlight 3 resistances and 3 supports. So 1965, 1992, and 2016. So these are the key levels on the upside. Resistance 1, resistance 2, and resistance 3. And on the downside, we start with the recent one, 1915, and then 1900 level ahead of the 1860 clear level. So these are the key levels on the downside if you are trading gold. This is it for gold. I'm just going to add some indicators. So you can see here, due to on the weekly chart, we're still in the middle part of the upper side of the band, so almost in the middle between the 20-week simple moving average, which stands at 1828, and the upper band, which stands at 2037. So almost we're in the middle, near 1930. To the RSI, dip back below 70 level. On the daily chart, also we can see how the bands are converging to each other. The width of the Bollinger Band is closing in due to the consolidation, to the lesser volatility in the market. So this is also drawing another levels that you can watch out for a breakout, which are also coinciding with the ones that we mentioned, 1991 and 1906 is between the 1915 and 1900 level that we talked about. So also you can trade the breakout out of the Bollinger Band. Moving to the H4, we're trading near the lower bottom, also finding resistance near the 20 H4 simple moving average, and the bands are converging. Also, we're trading near the 100 and 200 H4 exponential moving average. On the hourly chart, we found a little bit of resistance here, but still trading below the 100 and 200, and 100 recently crossed below the 200-hour exponential moving average. Moving to the WTI or oil, finally witnessed some move in oil after waiting for a long time. We can see how this candle last week was pretty big relative to the previous moves that we had. It talks about or the announcement of Russia's Novak that they are expecting a collapse or a drop in demand levels by around 9 to 10 million during 2020 had an impact on the market, and also since this large amount of production or drop in demand is exceeding the cuts agreed by OPEC and OPEC Plus. Also, there were another announcement from Saudi Aramco today that they are cutting the pricing for Asia, and they are expecting also lower demand, and the exports to Asia dropped recently. So this was weighing on the prices, and this came also with the drop in US stocks. So we had a simultaneous move between the US stocks and oil. On the weekly chart, you can see we're almost closing into the 20-week simple moving average. On the daily chart, finally we witnessed a divergence, or the bands are diverging away from each other after closing in due to the low volatility in the market. So we had this sharp rally here, which led to a drop below the 200-day exponential moving average for the first time since almost May, late May. So this is what you have to watch out for. There could be something cooking for oil or any moves coming in. I'm just going to highlight the key levels on the downside. So we have the 34 level, but ahead of this we have the 37, 20 level or 37 levels. So these are the levels on the downside for oil, 37 and 34.70. And on the upside, definitely we have the previous support zone near 41.60, and after that the previous top near 43.80. So these are the key levels, 41.60 and 43.80 on the upside, and on the downside 37.20 and 34.70. We can see how the sharper drop, since they are big relative to the previous price action, you can see the RSI drop sharply from almost 60 level to almost the 30 level. On the H4 chart, you can see also how the bands, they widened sharply from each other. However, due to the consolidation during the past couple of hours, we can see that the band tips are closing into each other again, and the RSI is moving back above 30. On the hourly chart, also, it's much clearer the consolidation that happened during the past couple of hours, and currently we're trading in the middle of the band. So this is for oil. Moving to the Dow Jones, I'm just going to dissect what happened in the Dow Jones, so you can just learn how you can assess what's going to happen in the market or what could be coming for the market. So just let's go for the H4 chart. So if you were following up on the recent moves in the market, okay, so by just being so conservative, drawing the previous classic line, so you just go for a certain channel formation. And this channel formation is just very simple. We talked during the educational webinars on how you can draw these channels. So you can see by combining the top and these bottoms, so we had this channel. It doesn't matter, okay, some of you might say that we had other lows. You can draw a couple of projections or a couple of expectations for the market and trade them. So you can see also this one was a little bit supportive. So we had a reversal here, another sell signal here, another sell signal here. So this was also supportive. So always you can see that using this analysis, I just used the classical technical, some of the indicators just to have a look, and there were some pretty good trades. So by just drawing this channel, we can see how the market traded exactly at the top and then reversed. Also, by adding another trend line, you can see how the market respected this trend line, 1, 2, another dip to the trend line. And then when the market broke below this trend line, we had a reversal here or retracement up to the trend line, and then another sharp decline came in. So you can see how the market was trading purely classical technical trend lines, and channels were more than enough to create a clear trading signals or initiate some certain trades. So you can see 1 and 2. So this is the trend line that you have. Another dip. This confirmed the trend line. And on the break of the trend line, this confirmed the reversal. And then the market dropped around 1,000 points from this reversal. So looking forward, we can just draw a couple of scenarios. So we can draw another scenario that the market could drop towards the bottom of the channel. So we just draw a line at the bottom of the channel. You can see that it coincides with the previous support and the previous resistance here, which comes in at 27,400 almost. So and now we can also align another support near 27,000, which is the previous double top reached here before the move. So these are the key levels on the downside: 27,000, 27,450. We need to trade back above 28,800 in order to retain some positivity in the market. So this could be one of key resistance levels. And after that, the previous stop near 29,200 almost, and also the top of the channel. So I'm just going to turn off these. So these are the key levels if you are trading the Dow Jones. You can see that we are trading in the middle of the range that we just highlighted, near 28,270, so almost near the pivot. We can get some positivity again if we trade back above 28,800, which could open the way for another move higher towards 29,200, and after that maybe a retest to the upper side of the channel. Also, you can just go for, in order to draw some expectations, you can just also higher this side of the channel, and then you can just look for some new highs on the Dow Jones near the top of this channel. So this is it for today. If you just have any questions, please write them down so I can answer them. I'd just like to remind you that all the information, analysis, news, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So this is all for now. If you just have any questions, please write them down. Okay, so someone is asking about the British pound against the Australian dollar. I'm just going to talk about it and then move to the next question. I'm just going to highlight this. So by just going for, I'm just going to do the same analysis. So last week we talked about about this consolidation zone here, and how you should watch out for any break below it. So the market broke below it, and then we had a little bit of retracement to the upside, and then we are moving towards the slow again. Okay, on the weekly chart today, we're having a clearly bearish engulfing candle. So watch out for how this will evolve and whether this could continue, especially with the pound weakening against other counterparts due to Brexit issues. So watch out for any break back above 182 level. As long as we're below 82, you can just look for some negativity. So watch out for 182 level on the daily chart. We can see the big body showing momentum on the downside and the retest of the previous support. So watch out how the price will react here, since this support is a little bit critical near 180.65, and after that definitely the previous lows near 78.70, and on the upside any reversal back above 182 and 182.80 could be positive. So, but what you have to watch out for is the talks, how the talks will go, how the Brexit negotiations will go, and how they will affect the British pound. So definitely the classical technical or the technical analysis will give us two scenarios to the upside and to the downside. We can definitely find scenarios on the technical analysis that favors both sides, but currently, since we have a key event happening, it pays much to watch out for the outcome of the event. So this is for the pound against the Australian dollar. There's someone also asking about the correlation between the US stocks and the dollar. So the question is, what's the correlation between the US dollar and US stocks? If the dollar becomes strong, then the stock will be weak. Why is that? Okay, so what we are having lately as a dilemma, if the market is moving, when we are getting out some economic indicators, definitely this is good for this is showing that the economy is progressing and it is recovering. But what you watch out for is how the Fed will anticipate these moves. So some of the traders, they're always afraid that if the Fed believes that the market is recovering properly, they will be looking to tapering asset purchases, and then on the long run to increase to raise interest rates again. This would be supportive for the dollar, but this could be also weighing on the US stocks. So this is what you better watch out for. On the other side, or on the contrary, if the economy shows that it still needs a lot of support from the Federal Reserve, the Federal Reserve will go for pumping a lot of money again in the market, and this will definitely add the dollar supply, but also stocks will have some potential to rally higher. Okay, so this answer was this question was answered by two people again. So I hope my answer helps you. What will you take decision to trade stocks and indices? I'm sorry I couldn't get your question. If you just can rewrite it in a different way so I can understand exactly what's your need. So if you just want to trade stocks, individual stocks or corporate stocks, you better watch out. You have to look for the financial statements of the company and how solid the company is, and definitely you have to look for the performance of the sector and the general performance of the stock market. So this is how you have to dissect this. So you have to look at these three key elements. So the solidness of the company itself, the board, the expectations, the coming plans, how the sector is doing, the overall sector, and also how the general stock market is going. So this is how you start picking stocks, and also you can choose your entries based on a technical analysis on certain information, classical technicals, or by using some of the key technical indicators. Okay, so I guess you meant 29,100. So just if you just can correct your question, the situation of the country does it affect my decision? Yeah, definitely. The general situation definitely it does affect. It should affect your decision. But what we're witnessing lately is that there are many factors that affect the market, but the weight of each factor is different from another. So recently, the asset purchases, the heavy money supply, and also the returning back to normal activity is being supportive to the rally to the upside. So this is what's affecting the market recently. Sir, we're just a little bit. Do we expect Dow Jones to go higher at 19,100? So now definitely you need first to look for the movers that could move the Dow Jones back towards these levels to 19,100. We were talking about 8,000 points, 9,000 points from where we stand currently. So first we have to look for movers that could drive the market back lower to current levels. If you're talking about 29,200, definitely there could be some optimism when the market is trading near the record high. And this was clear during the performance of the S&P, the Standard & Poor's 500, the S&P 500, and the Nasdaq. As long as they were approaching near their previous record high levels, they were breaking these records and trading back higher. Okay, also there's a question, what are we expecting for the dollar in September? There are some, based on technical analysis, as we explained during our analysis, that you could find two ways. But what's been happening lately is that the spread for expectations, or the divergence in expectations between what's happening in the United States and other top economies like the Eurozone and the United Kingdom, was played really really to the extremes in the market. There was some pessimism, huge pessimism over the situation in the United States, and optimism over what's happening in the Euro region and the United Kingdom. However, during the releases of the recent economic indicators, especially the ones for July and August, this showed that the US economy is on track for recovery. It's also performing in August. Sometimes it did outperform the Euro region. So this could be could be leading traders to reassess their situation relative to the dollar strength in the market, to the dollar weakness in the market. So this is what could be expected for September. Any further questions? I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. For the Japanese pairs, as I said, the Japanese yen there's a little bit of uncertainty on what will happen after Abe, how the new measures could impact the market, especially that the Abenomics were ruling the market for a while and then definitely led to some certain moves in the economic activity in Japan, and also to the rally in Japanese yen. So how will the new PM perform? Will the stance be to continue the Abenomics or not? So we still lack a little bit of an insight on what will happen on the long run in the Japanese yen. We need a little bit of time in order to have a clearer picture on what will emerge next. If you have any questions, please just write an email to webinars@icm.com or support@icm.com, and we'll be glad to help you. This is all for today. On Wednesday, we'll be having an educational webinar in English about Fibonacci tools on the MetaTrader 4 platform. We're going to talk about definitely retracements and extensions, about expansion, about the Fibonacci channel, and Fibonacci time zones. So you can also join us on Wednesday for this educational webinar. On Tuesday, tomorrow we'll be having an educational webinar also, but in Arabic for Arabic speakers. It will be about the Ishimoku cloud and the parabolic SAR. So this is all for now. Thank you all for joining. If you have any questions, as I said, you can just write an email to webinars@icm.com. And thank you again for joining.